Welcome to the North American Logistics Tech Summit here at FreightWaves. It's our virtual summit covering everything technology and logistics and freight and the supply chain. My name's Kevin Hill. I'm the executive publisher here at FreightWaves with Santosh Sankar.
Thanks for having me, Kevin. Yeah, great to be here.
It's great to have you here, Santosh. So you are one of the partners in Dynamo, the VC fund based here in Chattanooga, Tennessee.
Yep. Scenic City's home for us, and we're proud of it. Yeah,
that's great. And you guys started around 2016 with your first fund.
We did. So back in 2016, we came out into the world, and we were the first, if not one of the first funds to kind of put a flag in the ground and say, hey, like supply chain technology, there is a enduring thesis, a franchise one can build here around venture capital. And when I say venture capital, for folks in our audience, like we are some of the early of the early, right? Like we come in and there's a subset of our investments where it's an amazing team. They have this like amazing insight that they can compound and build a business around, and we'll write them an investment and work with them to kind of this point where they're able to scale and introduce capital and relationships in order to help them do that.
And that's seed, and you do pre-seed as well?
We do pre-seed as well.
Okay, and for our audience out there who aren't VC masters or in tune with the VC world, what does seed really mean?
Yeah, that's a good question. So the way one can think about pre-seed and seed, and the way we simplified even for ourselves is pre-seed is when you are pre-revenue. Broadly speaking, you might have a product, you might have some people that are giving you feedback, tinkering, but you're largely pre-revenue. And seed stage is early revenue generating. So that's kind of how one can think about it. Now, kind of right now, like you'll hear like the venture market's hot. It is red hot.
There's so many deals out there right now, we can barely count them, right? They're flooding in here to FreightWaves.com. Every single day we're writing up, Ship Hero just did 50 million, Project 44 did a huge round. It just goes on and on every single day.
Yep, it is super hot, and you might find that some of these distinctions I provide you, people are funding it without paying attention to some of these distinctions. Because if you note how I've described the stages around the traction of the business. And that's where also we kind of maybe tongue-in-cheek say, we like to take some of the great parts of West Coast venture investing, with some of the pragmatism maybe you'll find in New York or even in Europe because we're global, and we bring it together to help our founders build just great, enduring businesses. Right?
Yeah, it's just that pre-revenue, as you're saying, and just now getting revenue, so they're smaller checks.
So our check size is, we announced last week, we just closed our second fund.
Yes.
43.21 million. So I'll let that kind of sink in to people who like that numerology humor. But our check sizes range anywhere from 250 up to about 1.5 million. So it really depends on where we're entering, obviously kind of the valuation in terms of the deal, but a lot of that's driven by, right, team. We say 80% of a decision is always team-based, but market dynamics, what type of traction they ultimately bring to the table.
Yeah, and so FreightTech has been hot for the last 5-10 years. Certainly the last 5 years.
Yeah.
A lot of money has poured in from VCs. The last year we went through COVID, we went through the pandemic, we went through supply chain issues around the globe.
Yeah.
How hot is it going to get coming up in the next couple of years?
Yeah. So I totally agree with you that there's been increased attention into the types of things we all think about, right?
Mainstream.
It's mainstream, right? When you have local publications in some of the cities across the country talking about how toilet papers run out, and it's because of this thing called the supply chain. Oh, like we don't care about the supply chain unless it's broken, right?
Yes, exactly.
And then everybody cares, and they're like, oh, what is that thing? Oh, a container? Like, oh yeah, like. What about that guy that tried to do a handbrake turn in the canal? But the thing that we saw, and I'll kind of take you into a part of like when we were raising our fund, right? From large institutions, we were asked the question, one manager manages billions of dollars. You're telling me like you can build a fund after fund investing in technology to service supply chain? What is that? And we're like, oh boy. And I remember it was a late evening and we were trying to compile anecdotes and data to prove. And that was pre-pandemic. Now, as we went through the pandemic and we finished out the raise earlier this year, we didn't have to. It wasn't a thing. It was like, we get it.
Yeah, we know exactly what it is. We know what supply chain is.
So I say that because we're, I think, entering into this golden age of supply chain technology right now, where you've had a first era or first generation of technology-oriented business, right? The Convoys, the Flexports of the world, that people start to say, oh, that's interesting. And now you're getting to this point where now you have large generalist investors in venture capital saying, and equally corporate saying, we need to invest there. Either as customers or as investors, we need to allocate more chips.
We've seen more corporations invest in early stage startups and startups.
Yeah. So the team at Ryder has a great corporate venturing program now as well. So yeah, absolutely.
Yeah, these venture capitalists within the corporations, right? Investing dollars into new technologies that they can use in the future.
Yeah. And if we think about the origin of some of these supply chain institutions, organizations, are very entrepreneurial, right? Highly entrepreneurial. And it's interesting to see how, at this point, they're kind of coming back around and hitting some of those roots to say, hey, like, how do we think about disrupting ourselves? We don't want the innovator's dilemma or who moved my cheese and complain about it, but how do we actually lean into some of this that might cause discomfort?
Yeah, a lot of discomfort, really. So when you look at the landscape of FreightTech, what kind of technologies are you really, ecstatic about?
Yeah. So sometimes it kind of leaves our audience bewildered when we say, like, we are not focused on software or hardware or a particular business model. Because what we want to do is we want to approach each and every problem. Because when we define the supply chain, Kevin, we look at it across 5 major areas. So furthest upstream is everything related to manufacturing, procurement, supplier management. We affectionately call it factories, farms, facilities, where we build units of value. But when you just very simplistically follow a pallet through the system, international logistics, surface transportation, warehousing, fulfillment, last mile, that's our world. And the problems in each part of the supply chain are very different. They require the merit and the rigor of having different types of solutions and business models applied. So I'll open with that. Where we think if we had to pick one spot and say we need to over-index is around warehousing fulfillment. And if we were to think about the last 10 years or so, how things have kind of panned out in and around supply chain, the consumer actually has been the focal, right? Amazon has kind of conditioned us to expect things 2 days, same day, incredible amount of visibility into that fulfillment process. But then think of like everything around DoorDash, Uber, right? We've been conditioned to, and equally, that's where the venture money has gone, if you think about it. And it's because when you think about the VCs that are at the generalist shops, credit to them, they've done great for themselves, but they saw that, they lived that, right? It's like, oh, somebody can bring me my dinner? That's really cool. But that's forcing a rewrite up the supply chain. So the next natural place is warehousing fulfillment. But guess what? We are warehouse constrained in most developed markets. In most developed countries, we don't have enough warehouses.
You're exactly right. We don't have enough warehouses, and that especially applies to the cold chain. Cold warehousing, the capacity is not there whatsoever. Is part of the warehousing is because there hasn't been that much investment in technology in most warehousing. You have the Amazons and you have the big box retailers who have invested in that. They're pretty tech savvy. But there's a lot of warehouses out there right now who are still, paper and pen.
Yeah.
It's all paper and pen.
So it's twofold. I think like the one thing that we're touching on is we just don't have capacity. We don't have the physical boxes to put like freight in. But then the second piece to that is as you're seeing this new generation of assets come online, there is now, hey, like we understand the savvy of some of the best players in industry. How do we ensure that it's an automation heavy environment? So that's certainly an opportunity that we continue to lean on. We've made a handful of investments already. But what happens to the existing legacy environments, right? They need to be able to compete and provide the same type of operating leverage that the new players or their new facilities in the portfolio have. But you have these mixed environments where you have man and you have machine, and that's where safety is a big thing we're interested in that sector.
You know what? That's something that's probably underserved or undervalued right now. But it makes a big difference. Safety. That's a great space.
Safety, and at the end of the day, like we have one founder in our portfolio, Eric Nieves, a +1, and he'll say, like, at the end of the day, you have to understand the beauty of the human. Like, we have context, emotional awareness, dexterity. So yes, things will be increasingly more automated, but like the human is still very important as a part of the system.
It is, and that brings up another point, right? Machine learning, AI, RPA, we all hear about it all the time.
Yeah.
Is that a little bit overhyped? Is it here yet? What are some of the real uses for it?
That is a very good question, and that's where oftentimes we'll have corporates in our network call us and say, like, hey, like, is that actually like ML? Or it's like, well, like, what are the types of questions one asks to ascertain it? And we actually will walk them back and say, okay, like, what's the outcome you're trying to get to? And oftentimes, like, there's like very rudimentary, basic, like, correlations one can run in a spreadsheet to get to 80% of the answer they might be seeking. It's like, well, do you even need to go down this rabbit trail? But there are parts of the supply chain workflow. You mentioned RPA, right? And that's where ML and AI could be interesting. Because what you're actually trying to do, if you think about brokerage business models oriented around services, the reason technology exists is to provide operating leverage to that business. And basically, what that means is you're able to add revenue and you don't need to actually add humans, right? That marginal revenue dollar actually is serviced by technology. And that's what you have to think about. And as you're thinking about going through this process or this conversation with the startup, oftentimes you have to understand, how are you learning the culture of what I do? Because that's actually the differentiation, right? When we think about the 3PL landscape, 3PLs build a name around service and satisfaction. And that is very much tied to your culture. Yes. So your point, or rather your question answering directly on AI ML, it is a thing, but you have to make sure that the talent a company brings you, and when you sit down with them and you might have a conversation with the VP of engineering, it's actually, does this person have the chops? Like, what did they do before? How are they articulating the key parts of their product? What type of things do they need from you around the integration in order to deliver value, right? And you should probably be hearing articulation around, this is our model. This is what the training data we need for the model is. This is how long it takes for our model to understand certain outcomes and to then drive value to you, right? Yeah, these are the types of things that I look for, and I understand, okay, you're able to articulate the things related to this type of product or business model.
That's awesome. So this summit is mostly dedicated to North America. So we're looking at U.S., Canada, to Mexico. Dynamo, though, invests in worldwide supply chain companies. What's the big differences between investing in Europe or the Middle East or Asia as opposed to here in the U.S.?
Yeah. Oh boy, that's a really good question. And it comes down to a few things, but it's very much around the sales and service orientation, right? You're talking about different languages, different cultures, and that means business practices are wildly different. And the one thing you'll see when we invest abroad, even in English-speaking developed Europe, we'll oftentimes look for a local or a regional co-investor to work with. And we look for them to bring some boots on the ground support, but also, like, how do you navigate cultures and ways of doing business, language, if that's important. But the interesting thing that you'll oftentimes see is that between at least the US and Europe, in the US here, we're a few years ahead of kind of where things in Europe are as we think about technology, the implementation of technology. So the one thing we can also do is we can actually take our observations and lessons here and cross-pollinate it to our European founders. Asia is different. Asia, there's very much kind of the influence of the public sector in the way one does business. Culture is very different. So it's even more important to appreciate that and equally have a local kind of partner there to shepherd us along.
Yeah, certainly the cultural differences always, they're always a challenge. They're fun, but it's still a challenge,
yeah,
right?
and one needs to be sensitive to it and aware of it, because equally you don't want to like lean into a reputation of look at that dumb American, right? Like coming here and trying to do this and that. But it's fascinating to see some of the product sophistication coming out of markets in Asia, and I have this belief that actually you see a lot of interesting supply chain oriented innovation that's starting in Asia, and over time it makes its way into developing markets. It actually goes westward, and we can learn from that. We've seen in other sectors, and I think we can learn from that, understand that a little better, and figure out whether it makes sense to actually kind of encourage and cultivate here.
What do you think about some of the future trends here? You know, you guys just raised 43 million, 43 what?
43.21 million.
0.21 million.
4321, yeah.
4321. And it's really based on a couple observations that you had, and certainly COVID has changed the supply chain. What are the major trends that you're seeing outside of, you know, of course, technology and new startups and are going to attack these problems? But what are the problems that we need solutions for right now?
Yeah. So because we spend our life like dwelling in this, some of the things that we'll oftentimes invest in will feel esoteric or like really, what, that right now? But visibility has been one. I know there's been a lot of capital put against visibility. When I first started in the industry also, I had an executive who had been at that point like 35 years and pulled me aside. He goes, listen, like in the 80s when I started, we were talking about visibility. I was like, well, why are we still talking about it today? He's like, it's unsolved. And we still believe it's unsolved, and you can see that in some of what we've experienced to date. So we continue to be really interested in visibility, not just the data. What can one glean from the data?
That was my next question, really, because, you know, over the last, I've been in trucking 7 to 8 years now, a lot of data. You know, there's more and more data coming online. You had the ELD. ELDs come online, a lot of data with that, a lot of data with the visibility. How do you determine what's useful data and what's not useful data, right? I mean, that's something, it's like we have all this data, I'll say it once again, data, right? We have all this data, we still really haven't figured out how to use it well.
We, gosh, it was like 4 years ago, we had the core executive team of a publicly traded 3PL in our office up the street. And I remember one executive like just pounding his fist on the table. He's like, I'm just done with data. I'm done with dashboards. It's like up to this. He's like, I want to know so what. And he said, I want to know so what, but I actually want you to just do it. And then come back to me with an audit report. And if there's ever anything I need to dwell or dig into, I can go do that. So as we think about what does visibility ultimately provide, we've actually come to a belief that people don't actually buy visibility. People don't buy visibility. They buy the so what of visibility. But there's a belief sometimes when you speak to founders and also sometimes the buyers, like we just need better visibility. But why do you need better visibility?
I know.
So we actually have just closed an investment that's unannounced around visibility in the parcel and e-com fulfillment sector. So if you think about, hey, you get this status update from one of the carriers that your parcel is due to arrive today. You're all excited, you get home, it's not there. You know what happened? The possession scan when you left the outbound dock at whoever the fulfillment provider is was incorrect. So actually there was a mispick and you had a truck that was on its way, but you've marooned a couple packages, right? But how do you actually solve that? Because you know what, depending on who you are, that's a $50 issue because a customer's calling you or they're going to spin up the chat bot. But what about all the brand and reputational damage? What about the SLA that you had with your 3PL provider in order to get a certain level of accuracy and non-timeliness? So like these are the types of things ultimately, right? I'm not going to sell you the visibility, but I'm going to sell you the modules that allow you to handle by exception in your fulfillment network and make the whole system more accountable and transparent to one.
And on visibility, again, you hear a lot about visibility on the road, in transit, but working your way up the supply chain into manufacturing, I don't know too much about it, but I would have to think that there's a lot of room for improved visibility throughout the entire supply chain. I know we talk about the transportation, logistics part of it, but on through that,
so
the
let's take the journey upstream for a moment, right? you had Jet and the team at P44 acquired Ocean Insights a month or two ago. Now,
yeah.
In the last
very
quarter,
recent, very recent.
We actually invested a year ago in a company called Vision that provides API services around container visibility, and that was a year ago, and it like was not obvious, right? And now it's like, wow,
yeah,
it looks like, oh, but it's like, but again, it goes back to these like esoteric problems that are not solved, and it feels simplistic. Like one should be able to know where your containers. Not that easy, my friend. So that's one level beyond service transportation, but it has impact, right? If you're a dray provider, how do you think about route planning, shift scheduling, labor management? How do you not end up at the terminal just queuing up like you're seeing at Port of LA, Long Beach, but then even further up to your point, right? And some people call this the first mile logistics, where how can you even be really smart about your international forwarding operations if one doesn't have capability to understand the first mile? And you have some interesting companies, Rob Garrison down at Mercado, who's trying to provide this type of capability and service, say, hey, when there's a delay in manufacturing, like you need to trigger all these other exceptions.
That's what they call the bullwhip effect, right?
That's right.
And you have these huge angles right now, these huge waves of bullwhip effect, and visibility, the better visibility you get, the smaller those fluctuations are.
Yeah, in theory, but also how do we prevent the human from getting into it, right? Where we tend to overcorrect ourselves, and you'll see this in asset-based businesses where you see a big like purchase binge of tractors, and you go on a hiring spree for new truckers, or equally the steamship lines are now commissioning ships back in order to rebalance containers. Well, we also have to remember we're human, but that's for like data and allowing, to a certain degree, machine to maybe take over some of these more quantitative tasks can allow us to have a more resilient and even keel supply chain.
So here we are coming up on 4th of July, the end of June, here in 2021. It's just flown by just like that.
Yeah.
What's in store for us in the second half when it comes to FreightTech and really the freight markets, the logistics market? What are your back of the envelope predictions?
Ooh, this is good. So I don't believe that we're going to see the container mess unfold for another year. I think that we're going to continue to see a lot of turmoil at our ports. I think it's going to reveal perhaps similar to the silicon conversation around, hey, is there like a national security aspect to it? I think you're going to see maybe not national security, but an economic security question raised, where are we investing enough? Are we modernizing our terminals, our requisite port operations? That's going to keep inventories low for the next 12 months. The risk here now is that if inventories continue to stay low, does that hinder consumer spending? It's the largest part of GDP. What does that do for our broader economic health? So that's probably not as happy of the things one might hope to hear from me, because I'm supposed to be an optimist.
Well, it depends on what side of the trade you're on, right?
Yeah, that's true.
It really does.
Totally right, totally right. But I think the types of things that we're seeing as a result of last year, the ongoing tensions around supply chain this year, is we're seeing corporates having meaningful conversations at the board level down, saying, how do we invest further into technology, but how do we think about our entire relationship, right? Like the supply chain is I call it the OG, I'm a millennial, the OG network effects business. Right? We're talking about a network, like we're a community here. So continuing to see really interesting things around how workflows are inserted. And we have, I think, seen a great crop of businesses that are horizontal in the nature that they'll go after most industries with a horizontal supply chain technology solution. But equally, how do you think about different verticals? So we actually invested in a dairy supply chain business earlier this year. We're seeing interesting opportunities in consumer electronics related to that as well, pharmaceutical as well. So I think you'll continue to see certain digitizations of vertical supply chains that we're really interested about. I also think that you're going to see, at this point, more interesting things come out of Europe as well when it comes to how do you think about pushing the envelope on supply chain technology, specifically in and around automotive. If you think about just the concentration of talent and mind, but stress on industry in Europe, Germany, France, and Renault, the UK, Jaguar Land Rover, although you're not supposed to call them Europe now, they're the UK, silly American.
Yes.
But how do you actually piece all this together? And what I'm also articulating is these are big underlying industries to the economy. So if they're under stress and they're under prolonged stress, consumers can't get what they need, you're going to see a broader economic backdrop that may not be as favorable. But like I think to your point, Kevin, like there are certain areas where we can all play, be good partners, make the right type of investments in order to hopefully keep things stable.
It really is. I think we termed it, we said this a couple weeks ago, it's the golden age of supply chain right now. It's very interesting times. It's good to be a student of the supply chain. Technology is going to improve it as we kind of maybe get out of a little bit of the chaos that we're in right now. And congratulations to Dynamo and yourself for raising the next fund, and hopefully it's even more successful than your first one.
That is our plan, and I'm excited to say we've partnered with some amazing founders, and really all credit to them. They're doing the hard work. We're just fortunate enough to be on the ride.
That's fantastic. Thank you so much for joining us, Sasha, and doing our keynote here to kick off the day. We have some awesome fireside chats coming up. We have some great demos, and it's going to be a great day of technology and what's in the future for the supply chain and logistics and freight tech.
Yep.